Hi, good morning. I'm Joe Neighbour from Signal Centre, and today running through a quick few charts on oil, as well as the latest headlines and updates on what's moving the oil market at the moment. There have been further concerns over the last couple of days with regards to the disruption in the Gulf of Mexico output. That's continued to underpin the oil prices throughout yesterday's trading session. There were, however, reservations also over Chinese demand trends. There was choppy trading yesterday following the US inflation data, with initial gains on a weaker dollar as the US currency regained some ground throughout later in the session as well. WTI dipped to near $70 a barrel, but there was solid buying on dips as we continue to expect going forward. So energy prices appear to be soaring across the whole of Europe at the moment, and clearly this is having an impact on oil. So later today at 3:30 we have the EIA crude inventory numbers as well, so that's a key piece of information you need to be on the lookout for later on today if you are trading oil. So let's jump over to the technicals, and in front of you right now I've got a weekly chart on oil, and as you can see we've got this thick blue line of resistance which comes in at 76.80. So that's the key highs that still remain in place from back in October 2018. We did see a retest of those levels back in July, but since then oil's been in a sort of minor corrective or consolidative phase, and we haven't seen a retest of that level since. But price action over the last couple of weeks or so has been pushing higher, and let's take a look at the daily chart to get a bit more of an insight as to what is going on with the price. So this is the annotated chart that I'm looking at the moment, and which is really sort of driving my trading behavior when it comes to oil. So as you can see here, price was trading in a really nice bullish channel, as we have here, moving higher. We then saw this corrective phase materialize. So this move higher stalled at that key 76.35 level that we just talked about on the weekly chart. Then we saw the consolidation, and for me this looks to be a bullish flag pattern. So bullish flags tend to be resolved on the upside in line with the dominant trend. Clearly the dominant trend remains higher in oil and has done since we hit those awful pandemic lows that we saw back in March last year. So this minor correction or consolidation that we've seen take place appears to be being resolved at the moment with a break to the upside. So if I just zoom in here to give you a little bit more clarity on this. So we've got this sort of consolidation channel or corrective channel that's formed. We saw buyers step in at these lows down here at 61.70, and they were pretty aggressive about doing that as well, although volumes weren't particularly great on that move higher. Maybe that was just seasonal impacts, because obviously we've been in the summer holidays in most parts of Europe and North America, so traders don't tend to be as active, and volumes can drop. But we are in the process of breaking out of this consolidation channel, and we saw really the first move to the upside on this on the 13th of September. But for me, we really need to get above this 70.40 level, because this was the key swing high that we posted on the 2nd of September, and by taking that out we really sort of open up the upside for a continuation higher. So we are moving higher today. Yesterday we posted a bit of a doji candle, as we discussed. There was a bit of to and fro in the dollar price, and as a result it had a knock-on impact on the price action for oil on the session. All in all, the battle between the bulls and the bears was an even one. That's why we get these doji candles formed. But today we are pushing higher, almost 0.5% higher. That's in front of this all-important EIA number, which is due out at 3:30. Obviously, we've got a lot of underlying factors as well, which are driving prices higher at the moment. So for me, it looks like the outlook remains bullish on oil. And due to the fact now that we seem to have had a break of this consolidation channel, I think we can start looking for higher prices over the medium term. A number of investment banks last week were all very bullish about the outlook for oil as well, talking about prices rising throughout the autumn period, and certainly the technicals are matching up with that at the moment. So for me, it looks like higher prices will be seen. The next key level to look at on the upside comes in at 76.35, which was the key high that we posted in June. And obviously when we looked at the weekly chart at the start of the video, there's a very big level there that goes back to 2018, October 2018, which if we can overcome, there's a hell of a lot of fresh air for us to move into on the upside. If these pressures continue to remain on a fundamental basis with regards to oil, then there doesn't really appear to be anything to slow down oil at this moment in time. So clearly the outlook is bullish, and for me it's a case of buying on dips. So looking for the next step higher, which is up at this 76.35 level in the very short term. So yeah, all looking pretty rosy on oil with this break of consolidation trend this week. Hopefully that's been insightful, and as I say, keep an eye out for that number at 3:30 today. I'll be back next week with some more updates on the oil outlook. Until then, trade safe. Goodbye.